All right, all right, all right. Welcome. What a crazy elections, huh? Absolutely insane. I've been saying that for a while, and it's true. It's just crazy. How they can't just, count the votes. Modern technology, you would think that this would be easy. I guess not. All right. I cannot see your chats for today. I will try to do something later. I don't know what the deal is, but let me make one more attempt to see if I can bring it up, and hopefully it will work. Just give me one moment here. Okay, there we go. Yo, γεια σου φίλε μου. Σπήραμε την κοιλώτα στον νόμο. All right, I got the chat up. Good. Just let me size it up here. Oh, come on. Oh, I started out with a Commodore 64. You would think I would be an expert at this shit, right? All right, all right. So, um, let's start with the NDX before I just go through everything. Um, Again, so long as it's above this trend line, um, it remains bullish. Now, we're still below this major resistance area, okay? So this usually is more paramount than the smaller trend line. The difference here is that we are high basing. I don't think anybody can dispute that, right? That we are building pressure right at the top of the structure, all right? Right at the top of the structure, we're building that pressure. So this could lead to a move up. Now, it's exerted a lot of energy to get all the way up here. Okay, it's a 10% move. It doesn't mean that it has to remain a 10% remove. It can be another 2% up. Okay, but this is a lot of energy that was uh, that was used up. And typically, what happens, it has to usually correct. All right, so that's the deal with that. Now, take a look at the S&P. It's the same story, right? We can make an argument, and it's a valid argument, that within this structure, within this move, that this is now starting to become an M pattern, okay, topping out. Um, in both cases, by the way, even in the NASDAQ. But you don't know that. You can't know that until after the fact, all right? But it is possible. Now, some people have said that this is not an M pattern. That's false. It's still an M pattern. The fact that there's a movement uh, counter trend, it doesn't matter. The M pattern of lower highs exists still. Even. Remember, I've said this always, that you don't know when it's going to turn. Is it going to turn here? Is it going to turn here? Or is it going to turn here? These are unknowables, but we do know that previous highs do tend to act as either a pause or a potential area of reversal. So you really need to pay attention to them. It's not, you know, you have to let the data tell you what's going on. And I know a lot of people are all pissed off at me because I said Biden would win and Trump would lose. It has nothing to do with me. I'm just telling you the way I looked at things. And I'm not, believe me, I'm not a political person. I'm apolitical. I never gave a shit about politics until I saw Trump. And it's not even about the politics. It's about Trump. I don't like him. I never liked him. So don't take it out on me, man. I just told you what I saw. That's it. So, and I said it back in March. So don't think that uh, that was any different. I didn't know it was going to be Biden, of course, but I said there's no way that Trump would get reelected. People are not stupid. You can't lie to them. You can't pretend in the middle of a pandemic killing them that you're going to be reelected. It's not going to happen. Forget it. Just not the way it works. I don't know how people think, but it was night and day to me. I don't know. Anyway, don't get pissed off at me. All right. It's the same thing with charting, bare knuckle charting. You want to go long, you want to go short, do whatever you want. My job is not to tell you what to trade. My job is to show you where the risk rewards are. And I use waves, and those waves create structures, and then those structures give you key risk reward areas. How you do it, how you play it, up to you. You want to go long, you want to go short, I don't care. Both are valid. You want to say that this is going to blow out? Buy. You want to say that this is going to fall apart? Short. But this is a key area. Okay? It's a key area. This is where you want to, set your risk reward. If you go short, if it goes up a little bit, you stop. You want to go long, goes back into structure, stop. Your rewards are well defined. Your risk, well defined. You guys make that decision. All right? Okay. Now that we got that out of the way. Again, the point of these free videos is so in the future when I do make videos, we are all speaking the same language. Okay? So you at least understand how I look at the markets, how I look at economy, and how well the results produce. Okay? You can believe in whatever you want. You want to be an Austrian, be an Austrian. You want to be an MMTer, be an MMTer. I don't care. But I'm going to tell you based on what I see, and I can point it to you. It's not like I can't point it to you, right? And you guys can go out and verify this yourself. You can go out, see how what I'm telling you is playing out. Okay, these are fractals. Economics, they're not going to change, right? If it doesn't play out the way I tell you it does, fine. Don't listen. But at least get the alternative view from whatever you believe. All right? Okay. And don't get pissed off at me. I do just fine. Thank you. All right. Small caps. You see it? Potential area of reversal. Potential area of reversal. It broke out. Came back in. Broke out again. Came back in. Right? You see it? Does it have to be below? No. Does it have to be right at? No. Can it just break out and then turn? Yes. I don't know when a wave is going to end. I can only tell you that you should pay attention to previous highs. Okay? They are potential. The key word being potential. Doesn't have to do anything. But this is a key area. If you believe that this is going to go higher, buy. If you believe this is going to go lower, short. If it does the opposite, stop. Your reward, your risk. Right? All right. So we are still within this larger channel, which that's a Greek way of saying it. See, we don't have ch in Greek. We have ts, wits, not which. So here is the structure: 1, 2, 3, up, and then we popped. We still have not gotten to the top. Maybe we will, but for now, we have not gotten to the top. Okay, if this fails, the chances are that there's not enough buyers to push it up to those highs, and then that is potentially dangerous if you're a bull, because this entire structure can fail. Okay, it's not going to go in a straight shot, but the entire structure can fail. Okay, so be mindful of that. This is another example here where it came up lower, high, and failed. It could have failed here. It could have failed here. Okay? Lower, high. All right. So let's go through this. Yesterday, we left off that there was a lot of indexes, a lot of indicators showing that we were indeed up against resistance areas. Previous to that, when the market was falling, I was saying, look, there's still more downside in the markets because there's not enough indexes hitting support, right? That was last week. Eventually, all those indexes came down to that support area. And then the reversal came and everything went up, and now everything was up against resistance. Today, we are observing what? A sideways market, right? So nothing really substantially changed from yesterday. That's why I didn't do a video. I had things to do, but there was no real urge to say, hey, look, this potentially can do this and that and whatever, right? It's just a sideways market. And up till today, it's still a sideways market. So, let's see what the message of the market is. It's Friday. It's towards the end of the close. It's 2:30. Markets tend to move after 2 o'clock. So let's see what's going on. All right. So let's get started. Equal weighted S&P up against resistance. Previous high, pulling back a little bit. Okay. At the very least, this is a pause. Let me take out these volume by price. Okay, let's have a nice clean chart. Dividend weighted S&P. Okay, lower high, pausing, not quite at resistance. Okay, but it didn't touch the bottom either. Okay, so perhaps this is needs a little bit more upside. VIX breaking the last defense of the move up. There's a cup, no handle, right? It's clear. There were several lines that we observed, and they just broke through everything. So fear is coming out of the market. That's bullish. New York Stock Exchange up against resistance. Oh, that's noisy. I was measuring something. Dow Jones, lower high, okay, in that resistance band area, okay, but lower high. S&P up against resistance, Nasdaq up against resistance. We talked about small caps. Now we look at transportation. Transportation is up against resistance again. The FANGs, okay, broke out of this wedge pattern. Previous high, resistance, not pushing through yet. Can it? Sure, but I don't like wedges because they have this tendency of breaking out and then doing the opposite, or breaking down and doing the opposite. So I don't particularly like them. Doesn't mean they always do that. Absolutely not. It's not as definitive, is what I'm trying to say. Because right now, this whole wedge is negated. To be honest with you, I'm just not changing it. But if it were to, because it hasn't rolled over yet, okay? But if we got a hook and it ends up like this, okay? What is that? It's very simple. So 1, 2, 3 down. This is the compass 1. Then you get a correction, 1, 2, 3, right? And then you end up with this. Okay, a 3 down. That's why wedges typically don't work, because they end up creating a different structure once they hook, and then it becomes very clear that, oh wait, this is a rising structure or a falling structure, and then the opposite occurs. Okay. Now we cannot validate this because the count is not there for it. So what we are able to count, okay, is this, a wedge. A wedge that's broken out. Okay, that's it. Now you wait. Give me 1 second, please.
Mic off. Mic on.
Okay, so I'm back. I'm sorry about that. Okay, so we're testing the previous high. Let's see how this is going to work out. Um, from a macro perspective, think about it. We have companies in here that are extremely, extremely wealthy. Okay, I don't want to say overpriced, but they're extremely wealthy. $1.6 trillion companies. Okay, Apple, Microsoft, Amazon. These are mammoths. There are limits to these things. Okay, sure, it's a benefit that they have a lot of stock outstanding. They can absorb a lot of money from the mechanics standpoint. Yes, but please think about the macro perspective. All right, there are limits. I'm not saying that it can't go back to all-time highs, but I'm just telling you, take that into consideration. World stock market index up against resistance. You see this, the theme. It's the same theme we've been talking about now, right? That's the message of the market. We're up against resistance. It's got to make a decision at some point. Is it going to go higher? Is it going to go lower? I cannot tell you that. Okay, it's not my job. I don't have the crystal ball. Okay, I can tell you that if it starts building pressure at these resistance areas, eventually it will push higher. And it makes perfect sense, right? It's not what I think. World Stock Market Index ex-US. Look at that. It's pushing higher. Let's pause here just for a moment. I've told you before that if the dollar were to fall, that is good for emerging markets. It's good for their currency. It's good for those stock markets. Now you're seeing that the um, uh, world index minus the US, removed from the US, is actually doing better. They're actually pushing through resistance. Kind of makes sense, right? Weaker dollar, they do better. So we'll keep this in mind. Again, if I can't point it and show it to you, don't listen to me. And I wish everybody would do the same thing. And I'm not saying that everybody says things wrong. It's not that they say things wrong. It's just they take things that are right and add the wrong things to them quite often. And that's, I think, the difference. Airlines up against resistance, pulling back. Okay, we're still looking for this to go down. China up against resistance, previous high, pulled back. Um, these are the Chinese fangs, the best of breed for China. Okay, continues to push higher. Of course, their economy is doing good. They've contained COVID. Um, emerging markets up against resistance. Okay, Japan is actually breaking out. Okay, but it still has to clear this. All right, it still has to clear it. So keep that in mind. The problem I have with Japan is that their government is buying their ETF. So these things, you take that into consideration. Okay. Soon the U.S. will be doing the same thing. Believe me, you'll see. The U.S. will start buying stocks. Australia up against resistance. Nifty 50 starting to break out. Remember I was telling you when this had dropped and the other markets kept falling and falling and falling and this was holding, right? Look at that. Huge move to the upside. Huge move. Going up against where? Yep. Resistance. All right. Best of breed in Asia, in my opinion. Korea up against resistance. Same thing with Europe. It's pushing, it's again exerted a lot of energy. It's actually higher than it was yesterday. Taking a look at Germany, um, it's kind of paused now. Uh, don't look at this as resistance. This is not. That was just something that we were measuring before. Okay. Clearly, to me, again, it looks like a 1, 2, 3 down. 1, 2, 3 down. Okay. I could be wrong. This can propel to all-time high, but I'm just telling you what it looks like now. UK, a little bit higher today. Okay, a little bit higher, but it's back in that range. Uh, Taiwan up against resistance. Brazil breaking out. Remember what I told you. Weak dollar, good for emerging market currencies, good for their stock market. It is in fact breaking out. Okay, and I said you can take this long yesterday. Okay, when we have this subtlety down here, it didn't have enough sellers to push it all the way to the bottom. Okay, we have a structure. It's pointing down. It's valid. It's 1, 2, 3. We have a hook. Okay, it's pushing up. Okay, I can't make it any simpler for you guys. If I can't point to it, you shouldn't listen to me. Saudi paused. This looks like it wants a little bit further downside. Okay. Um, to me, again, it looks like a 1, 2, 3 down. And then after it completes a 1, 2, 3 down, we'll see. Then maybe it can go up, right? Oil, right back down, 37. Now, ask yourself this. If the markets are going up, and they're going to go to all-time new highs, and they're forward-looking, and, would oil be selling off? Wouldn't demand for oil be higher? If there's more demand for oil, wouldn't the price of oil go higher? Okay. Again, it's about reading the markets. Listen to the message of the market. If oil is dropping, that's not demand. So I kept emphasizing that, you know, uh, oil is the coolest cat in town. They know what the hell is going on. Uh, no elections doesn't matter. The economy still sucks, right? We're still in problems fundamentally. So I think this has been one of the best indicators in terms of understanding the economy. One second. Uh, in so many ways, you can kind of figure out what's going on in the economy and what the market thinks about the economy just by looking at oil. Not always, because it's also, it gets its moods, okay? But you know, pay attention to these things. So when you're reading oil, think about what I'm telling you, okay? Bitcoin, look at that, incredibly bullish, just exploded to the upside. Fuck the market, all right? Now, at some point it's going to hook, then we can readjust it, okay? It's not a time to do that. All we know is it's incredibly bullish. It's at 15,500. It went to 16,000. It's not out of the realm of possibility that we're going to see all brand new all-time highs in Bitcoin. So, you know, let it go. Keep it going. Now, okay, you're seeing Ethereum, Litecoin, they're all kind of chasing. Ripple is chasing. Yeah. But again, these are not the ones you're supposed to own. Doesn't mean you can't trade them, but gold pushing higher today. Why? Money printing? Fear? VIX is down, so it can't be fear. So what is it? Money printing. You think Biden's not going to print? Of course he will. All right. So we had this arrow here for a while. Skip this. Skip that. Real estate popped a little bit. Okay, in the middle of nowhere, not doing anything. Commodities. Now this is interesting. All right, so commodities are still in this funky looking kind of, I don't even know what this is, to be honest with you. Okay, we're going to have to change it because the only valid structure now is this. Okay, and remember, anytime that the bear flags, they look funky. Um, it's doing something you don't understand, right? You don't have enough data for it. So keep that in mind. Don't try to force opinions on things that look funky. We've done enough of these charts where you guys know what funky looks like by now, I think. So we're still looking for the upside. You still have the thrust up. Okay, got a little bit tired, went to a sideways. The structure is still kind of pointing downwards on the upper end. So we're looking for that up move. Still, it's still bullish looking. Okay, till something changes, we still have that bias. It's just it needs time to correct. Palladium. Okay, moving to the upper part of this wedge. Copper pushing up. Base metals have actually gone higher. Okay, they've exploded to the upside. Now these were looking very ugly a while back, very ugly. Right, it looked like they were starting to fall apart and whatever. And look at that now. It's still in a rising wedge, but it's pushing higher. Um, agriculture pushing up towards the highs again. Okay, so it's building pressure. It's confirmed. Okay, it's a confirmed structure. 1, 2, 3, building that pressure for the next move up. What does that tell you about the dollar, right? Weakness. That you have money printing. It's not that the economy is going to get better and demand is going to be better, right? Oil told you that. So, precious metals breaking out, of course. That makes sense. Commodities, still in that bull flag. Sugarcane, boom, right back up. But it still has that structure that is pointing to the downside. Now, it doesn't mean that it can't go incredibly bullish. We know that this is a possibility. Okay, especially when all the other markets in commodities are telling you the same thing. Corn, tight, 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 broke back up into structure. Okay, and now it's an expansion. It's enough of a hook. So now you expand it. Okay. Wheat up against resistance. Breaking out. Steel. Look at that. It's breaking out. Soybeans. Kicking ass all over the place. Nat gas we'll forget about. And here's the dollar. You see, I didn't even have to look at the dollar and tell you that the dollar is falling. Right? So you have dollar falling, oil falling. Does that make sense? Doesn't it cost more dollars when those dollars are valued less to go out and purchase oil? Yes. So why is oil and the dollar down? It should be the opposite. That's what they tell you every day. Yes, that's one part of the story. It's not the whole story. Remember, there are more than one reasons why things move. It could be dollar devaluation. It could be demand, right? There's more than one thing. And you have to figure out which is which. And I'm explaining to you now how to figure it out. You got commodities rising, you got oil falling, dollar falling, right? And to some extent, when the dollar falls, stock market should go up. If there's inflation, which there isn't, but if there is inflation, nominally, the stock market should rise. Why? Revenues nominally rise. Profits nominally rise. So what do you think the stock market is going to do? Nominally, it would rise. And we've shown this example before. And I will show it to you again. And I'm going to use Turkey as an example. There's not much going on in the markets, and that's why I'm going a little bit slower today, and I'm explaining a little bit more in depth. I'm kind of reinforcing. Maybe there's some new guys here, um, so they understand how I view things and why, and hopefully they will start to learn as well. So if I can only find Istanbul, oh, there it is. Okay, all right. So here's a monthly chart, and this is what the Istanbul stock market looks like. Now I will show you the American priced in dollars, what it looks like. Huh? Huh? What do you think? Completely different picture. Completely different picture. Because the stock market priced in dollars is not the same thing as the stock market priced in lira. What I showed you prior was priced in lira. What I'm showing you now is priced in dollars. Okay, so in dollar terms, the stock market of Turkey has collapsed. In terms of the lira, the price of the Turkish index has risen. You see? What about Turkish lira? Turkish lira to to the dollar has collapsed. It has devalued. So that has also devalued the stock market in dollars. Doesn't matter how much nominally they go up, in dollars they have fallen. Okay? There you go. US dollar to the Turkish lira. It's up to 850. It has devalued since August 8th. It was $1.14 lira for every dollar. So you needed $1.14 lira for every $1. Fast forward 12 years, you need 8.5 lira for $1. So all those people who were saving their lira, especially under the mattress, have gotten destroyed. They have gotten trashed. The stock market. Oh, I'm going to buy the stock market so it can hedge uh, inflation. Did it? In dollars, no. In dollars, you lost your ass. In lira, you got some protection. For sure. You got some protection. Better than leaving it under the mattress. But in dollar terms, no. That's not the case. All right. Again, if I can't point it to you, don't listen to me. I'm not flashy. I'm not going to tell you you're going to be a millionaire and go buy a G5 and a yacht. Let's continue here. So let's look at, and again, the problem with the dollar, guys and gals, is that it's breaking the structure. Okay? It's breaking the structure. And that could be a long-term problem. Okay? We had some hopes that this was going to be bullish. And it may very well still be. You never know what happens. Okay? This was a 1, 2, 3 down, came up, structure above a structure. We were looking for more upside, but you know what? It failed. It's failing. It's pressure right at the bottom of the trend line, which means we're going lower. And this chart goes back to 1968. Okay, 1968. So this goes back to 86 from the high. So this breaks, it could get very ugly. And if people are telling you, don't worry about it, we can just print to infinity, well, you guys know what the reality is, right? You can see it. It's not what I think. Don't come after me. Don't get pissed off at me for telling you. All right, US dollar Japan continues to grind lower. This tends to be a leader. Uh, this tends to lead the dollar down. Dollar is falling not because of fear, right? Market is in all-time highs. It's falling because of devaluation. Last time it was this low was back in March 2020, and this was a fuckery move. Okay, and went right back up. And again, let's talk about these violent moves. Okay, they're there to provoke emotions. So when I start seeing moves in one direction or the other that are outrageous, they're going to reverse. I promise you, they will. They always do. Okay, this seemed silly back then, that this would never be tested again, and that was just one time. The same thing that was said about Brexit. Okay, fast forward from March till today, and look where the dollar is. Okay, it's coming back down. It wasn't just randomness. Euro US dollar, I told you yesterday, if you want to buy it, you can buy it. It's going to the upside. Actually, I didn't say it publicly. I said it to my subscribers. Pound pushing higher, testing previous high. Turkish lira we talked about. US dollar ruble back down. USD CAD. I said look for this to come and test the previous lows, and then we'll go from there. That's exactly what it's doing. Australian dollar breaking out. This could be a very long-term play. Believe me, this thing you can buy and hold it for years. Okay, I'm telling you right now, you can come back a year, 2 years from now, and you can see this. I may be wrong. Might go back into structure. Not my job. From a risk-reward standpoint, I would be on the bullish side at this moment for the long term. Up to you what you do. New Zealand dollar. Same. Same. Not only did it break this downtrend, it's also coming back into structure. You see? So this again, for the long term. What's that tell you about the dollar? It's in trouble, isn't it? It's in trouble. Not because I'm telling you, or I don't like America, or I don't like Trump, or whatever. Just telling you what it is. Dollar won. Dollar continues to devalue. And here is the Euro index, which is like the dollar index, breaking out. We had this in place long time. Okay. Sure, it was scary, and we had this in here. And I said, look, if it starts to hook back up, testing previous lows, this could break. And it did. It's testing the previous highs. Now it has to go through this area, potential area of reversal. After this comes this. Okay, these are targets. And then if that breaks, because we know where the compass is, right? This is the compass. This is 2, wave 2. What's to come? Wave 3, yeah? Okay. So you know on the chart that this could end up, this little structure could end up being a very, very big deal for the euro. Where have we seen this before? What's that say about the dollar? Don't get mad at me. You guys make your own decision. 10-year. Bounce right back into structure. Okay. Interesting. Is it rising because um, the economy is improving? That we need higher interest rates? People are selling bonds, right? If they're selling bonds, that makes the interest rate higher. If it's making the interest rate higher, then you need the earnings yield to go higher for stocks, right? So as stock prices go up, what happens to earnings yield? They come down, right? As stock prices go up, earnings yield go down. So when you have the 10-year going up and there's compression, something has to give. It's either going to be the stock market that has to correct, or it has to be the bond market that has to correct. It's not looking good, right? Is it looking good for the dollar? Why are they selling? Why are they selling bonds? And interest rates are rising. You know, when these small little subtle things occur, they may never work out. Never. And you can come back and say, Nick was saying this. He was so stupid. Oh, Habibi, I have nothing to do with it. I'm just telling you what it looks like. I'm telling you what the data is telling me. This potentially can become something big. If it doesn't, it doesn't. Don't come back and tell me that shit. But if I'm right, if I'm right, see, if the market is right and that starts to happen, well, you should pay attention to it, no? Just because the media is not telling you about it, or Mike Norman or Logan, doesn't mean that it's not there. Doesn't mean that you shouldn't be looking at it. Okay, interest rates, the bonds are selling off. 30-year bond. Aggregate bonds, they broke out and came back in. Okay. Could this be a break test go? I don't know. So what's a break test go? Is when it breaks the structure, comes back to test it, and then goes. If this is the case, then bond prices will rise, interest rates will fall, and that's good for the stock market. That's good for the bulls. Because, again, you can go higher in price, right? Higher in price, and then yield can fall. This can continue to fall and still be more attractive than 0.6 on a bond, right? 2.83 is more valuable than 0.6. Right. Junk bonds, skip them. European banks, they're popping. They've actually kind of broken out here. Okay. It's noisy. It's noisy. But for whatever it's worth, it broke out. Here's another one of those things. Now, I have to line these up because this is the emergency currency fund. The emergency currency fund is basically emerging markets, right? Did I say emergency? I think I did. You may get a buzzer. Anyway, so we had this structure come down, then we had a correction, and then it dropped, and then it popped. So we completed a 1, 2, 3 down. So now we're popping. We create this structure, okay, and now we're breaking out. So this was in place way before uh, this recent video. So now what? What does that say about the dollar? Dollar weakness. It's the same story. It's the message of the market. Look where we're going. Right up against that resistance area. What do you think is going to happen if we break through this resistance area? Right? Okay. I have no idea what this is. Ah, I know what this is. I just drew it, didn't I? Yes. Anyway. Um, 1, 2, 3 down. 1, 2, 3 up. If it breaks this, then the next potential area of resistance will be up here. Okay, we have the double bottom. Okay, we have the compass up. We have the consolidation too. Now it's breaking out. If emerging market currencies are appreciating in value, right? And you have places like Brazil breaking out of their structure. What's that say about the dollar? Weakness. Weakness. ExxonMobil continues to devalue. Financials are up against resistance. Let me bring this back. Up against resistance. Pure banking ETF, same thing, is pushing up against previous resistance. And biotech building that pressure at the top here. I think we should start to measure this. Okay. There it is. So let's see if this is going to push higher. And if it does, then we have to change this top line to adjust. And then this is going to end up being a 1, 2, and then you're going to get a 3 down. Okay. At some point. And then this will be the new channel. A rising F flag. Right? We don't know. We don't know how much, if this is going to push or if it's not going to push or whatever it's going to do. But from a counting standpoint of waves, this is a 1. This is clearly a 2 now. So you need a 3 at some point. Okay? It's in the making. We need more data. Water pushing to all-time highs. I love this. This is, I think, the kind of thing you buy and forget and just come back like when you retire. Hotels doing nothing. And hotels versus jet, hotels are doing better. All right, let's take a look at the FANGs. Market leaders. Okay, up against resistance. Megaphone. Amazon. Breaking out, pulling back in, filling the gap. Not very convincing. M pattern is still in play. Doesn't matter that he went up. Apple. Broke this downtrend, broke the bottom, broke the top. Let's see if this continues. So far it hasn't. And if it doesn't, that's bearish. That's not good. Right? Because this will end up, right? Breaks the bottom, breaks the top, and then reverses back down. So it needs follow through. It's not getting it thus far. Doesn't mean it can't. Netflix in the middle of nowhere. Google up against resistance, previous highs, not following through. Nvidia right back up to all-time highs. Okay, resistance again. Tesla popped a little bit, not doing, no follow through. All right, no follow through. All right, so that's it for the market analysis. We're up against resistance. The FANGs are not performing very well. The dollar is very weak, potentially a big problem. All currencies against the dollars must be bought at this point. Okay, that's what it tells us. Oil is signaling weaker demand. Bitcoin is going to the moon. Gold is going to the moon. And it's not because of fear. So it's got to be money printing, which supports the dollar being weak. And for those people, and I'll say it here at the end, for those people who make determinations of why a market moves Oh, it's because of Trump. Oh, it's because of Biden. Or it's because of this. Be very mindful of that. Okay? It might intuitively sound right. You might get a lot of people agreeing with you that, yeah, it's going up because Trump is going to win. And I'm not talking about particularly Trump or Biden. I'm talking about attaching cute stories to what is happening in the market. Okay? Don't do that. Listen to the message of the market and drive your thesis from there. If it agrees, you're on the right path. If it doesn't agree, then you're wrong. Okay? It's that simple. All right. So let's get back to the market leader, which is the NASDAQ. Okay, we said this is funky action. Let me get rid of this. We said this is funky action here. This could potentially turn out to be an M pattern right up against resistance. Um, it's still bullish in terms of this. I know I'm repeating myself, but I just want to make sure everybody understands it where we are. Okay, so this could become an M pattern. And an M pattern, you still have a high base, which is good. You still have to maintain this upwards trajectory, okay, in order to stay bullish. That could push it through, but, but, look at the move. Look at the move. It's straight up, okay. It's a moonshot, okay. I don't like them. We'll see. All right, let's look at the market internals. We don't expect much. Market hasn't gone anywhere from yesterday or the day before that. Uh, and after after it made its move, of course. Okay, so S&P is flat, led by healthcare, consumer staples, information technology. So nothing there. Laggards, energy, financials, real estate. Okay, that's okay. In the past 5 days, remember 7%, right? Remember I was telling you 7% is the max extreme limit for the week. It's Friday today, right? 3:15. Yeah. See where the market is? 7%. Told you. There's limits. You got to be aware of these limits. 2% for the day, 7% for the week are the extreme normals. More reason that if you want to be short, that you should be short here. So what's leading? Information technology. Yes, this is good. Healthcare, not so much. Materials, okay. Look where consumer discretionary is, all the way down. Right, number 4. Now you're saying, okay, it's a small, subtle difference, a couple percent, doesn't matter. Laggards, energy, utility, exactly where they're supposed to be, at the bottom. These are not bullish, and real estate. These are not bullish um, sectors. Okay. Again, if I cannot point it to you, and you verified yourself, don't listen to me. Don't listen to me. That's why it's called real macroeconomics and investing, because it's not hyperbole or what I think or whatever. I'm not that smart. All right, so let's take a look at the volumes now. Okay, we're happy at this point, point of control all the way at the top. We had noticed this void. It was far worse before. Okay, filled in a little bit. Filled in a little bit. It's holding. But again, notice how it cuts off. Boom. Right in here. Soon as price gets up there, boom, cut off. Algos, I don't know. Smart money, or whatever you want to call it, I don't know. All I'm telling you is it cuts off abruptly. Okay? There's something there that's not allowing price to go higher. So let's measure it from the bottom here. Okay. So 70% of all trades have gone off in this dark area, and down here now is shaded. Uh, that's the extreme. The bell curve looks really fucked up. So what does this mean? When you get a P like this, it's a short covering rally. Okay? When you get a P like this, short covering rally. I've showed you that before. If it's a short covering rally, you know, you be aware of that. Doesn't mean it can't go through, but you know, it's not why you want the market to go up. It helps, but it's not why you want the market to go up. We had another void in here. We had identified, okay, and then we're going to that meat and potatoes over here. So if markets do sell off in the last 45 minutes, like I said last time, you can expect a jump to this area and then a jump down here, okay? Because there's nothing in between in terms of volume.
Are you streaming?
All right. Measuring it from the high, okay, point of control is somewhere down here about 11,691. This is the all-time high. This is the low, not the all-time high, the previous high, lower high, okay? It's happy in here for now. Like I told you, the next area is somewhere down here, which was a point of control. And then if this fails, then you end up somewhere down here. All right. Pushing it out a little bit more from the top. All right. We get a little bit more clarity. So this is what it looks like. All right, pretty even. Bell curve. Point of control again is 11,400, 4,500, somewhere in there. Okay. So it's again, if we start to sell off next week, it would not be unreasonable to see it come all the way down here. And then if it's going to be bullish, then it will start popping from there, which also happens to coincide with this previous resistance area. You know, it's gone through it so many times, it's almost worthless. Okay. Same thing here. I'll just do the previous high. If I'm putting you to sleep, I'm sorry. Sorry. Point of control somewhere here, 3,400. Okay, we're starting to form that M pattern. We got a nice bell curve. Okay, price will correct down to here, and then we'll go from there. All right, we still didn't test this area down here, right? The previous low. So this may signal bullishness. I don't know. From the standpoint, nope, not this one. 63-day moving average. I don't have it. Did I drop it? I dropped it. Anyway, it's somewhere over here, around 3,400, where the point of control is. Okay. So let's see how this is going to start to behave on the very small time frame. 1 minute chart. Let's do 1 day. Let me bring this out so we can have some more clarity. So point of control is somewhere around 1257. We had a nice uptrend. That's failed, right? We have a nice little M pattern. That's failed, right? We came up against resistance. That failed. And now we're starting to see price back at that point of control, possibly forming some kind of head and shoulders. All right, back into the structure, which could mean lower prices into the close. Could. Not must. Any questions? So we covered a little bit of macro. We've covered charting in depth today. We talked about the markets. I gave you my little rant. Don't blame me for Trump. Don't blame me for data uh, that I present. Any questions? Anybody? All right. So let's see what's going to happen. We'll keep the video going. It's now 3:20, and the VIX is flat. Dow Jones is 0.5% down. S&P down 0.5%. Nasdaq, they're all uniform, except for small caps. They're down 120. And you know, if you're gonna short something, I would short this. I'm not saying you should. I'm just telling you, if you wanted to short, I would short this. PE is like, I don't know, 3,000 or something. Transportation down zero point 0.8. The FANGs down zero point 0.8. So the FANGs are actually leading the Nasdaq lower. In terms of looking at the Nasdaq in market hours, what you'll see here is gap up, gap up, gap up, right? So this is a gap up, this is a gap up, right? What do gap ups do? They're called professional. Some people call them professional gap ups. I'll steal that. I don't care. What does that do? FOMO, fear of missing out. They're designed to provoke emotion. That's it. They're not there to help you. VIX down at 2.5. All right, let's keep this on the 1 minute chart. Okay, we are looking for this to break. We got 3:23, so we got about 37 minutes left in the trading session. Let's see what it does. Any questions? One second here, please.
Mic off. Mic on. Mic feedback off. Mic feedback on.
All right. I have to do the advertisement. Sorry. If you're not a subscriber, come down to patreon.com/RealMacro. Okay, you'll get 24 hours live chat. You'll see my trades. They're not trading signals, but you'll see me trade. And great bunch of guys. And I think you will find it very useful. All right. So patreon.com